Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 13th of January 2017. The trap we're going to look at today is one of the first traps that I ever kind of uncovered, and it's what I refer to as an outside candle trap. Now, the outside candle trap occurs basically when you have a directional market of some degree, depending on the time frame. But so long as on the time frame you're looking at, you've got some type of direction. Always helpful to have a fundamental bias as well, so that you can make the assumption that if you've got selling and you want to be a buyer, then that's good news. And if you didn't have that bias, then that would be a little bit more challenging because you're just trading the pattern itself. But that said, the setup occurs when you've got that directionality and the market starts to head down in this case, and it would have seemed very much as if this was going to continue on to the downside as price in essence had bounced off that minor level of resistance that you can see in there. So resistance, goes away from it, comes back, tests it, resistance, tests it, resistance, tests it, resistance, and would have looked very convincing at that point that it was breaking to new lows. Indeed it does do that, and no sooner does it do that though, I want to just focus your attention on the wick of this candle. As it breaks out the low of the prior candle, it would have seemed very much like this was going to continue down, okay? And it did momentarily do that, and candles in many ways are optical illusions, because if you were looking at that in real time, that would have seemed like a good opportunity to take a trade, if that's indeed why you were considering. And breakout trading is a typical type of trading, so we know that at least some people would look at something like that. Now, it's important to know as well that it needs to be obvious, because the more people that have eyeballs on a particular type of set of price structures, then the better off you'll be, because more people get caught would be the idea, more people get trapped, and therefore that makes it overall a better setup. If it's not very clear, if you're struggling to kind of see it, then it follows that other people will probably be in the same predicament as you. So it's important it's clear, but as I said, candles do act as a bit of an optical illusion. They are traps in and of themselves, in my opinion. And try telling that to the person that sold that low, that they are not trapped, when the candle then flips up to the open of the candle and then reverses and closes at or close to its highs, taking out the high of the prior candle is the minimum standard. In this case though, it takes out several candles, so that's good. And then if you just think about what happens in the next candle, right, this massive strong move away, these people who would have held on to this position, and this being the worst moment for them, because lots of traders cancel stop losses when they're under pressure, and before they know it, they're up in this area and they're losing a lot of money. Now, when price comes back into this level in here, then there's an opportunity to go long, because the traders who went short in this area have obviously been through this disaster, and this is the first time back into that level. So what they're going to do, I would suggest, is they're going to do something that we would all pretty much be very keen on doing, and that is bailing out of the trade, right, or bailing out of break even. Okay, the motivation has changed. Over here, someone was hoping for money, right? Someone was hoping that this trade would make them money. When a trader's up in this area, it's not about money at that point. They're not thinking, oh, this looks good, right? Or I'm surely going to make some money out of this trade. No. Their mentality is completely different. They're in like a hopey, prey type of mentality, and panicking, potentially took too much risk. And the first opportunity they get, should they be lucky enough for price to come back into that level, they're going to take the opportunity to bail out, right? Break even, out they come. Can't believe the luck, right? These people from over here are very, very happy about that opportunity. They're highly, highly motivated to exit a break even over here. Now, there are other order flow dynamics going on. There's other reasons why you'd want to be a buyer over here. This is actually the US Fed 13th of December rate hike. That's another reason why you should want to be a buyer over here. Buy rights, 25 basis points interest rate, and this is the value of the currency at that moment. You know, we're over here at 50 basis points, so we shouldn't really be buy rights below this level. Now, it can happen, you can trade below it, but it's no surprise to see it turn. So if this pops up, you get a bit of a pullback. This looks like a pretty decent place to take a long. We do have some US news out today, so that could be a pretty decent catalyst for an entry. If you get good retail sales later on this afternoon, then that's probably going to be a trigger to get in this trade. So there's no setup per se in terms of like you know, this is the candle pattern you want to get in it, because it's just retracing. So at the moment, there's no trap there per se. If you're a seller, you're still kind of happy, but this is definitely a location. I'm expecting that retracement to fail and then head higher. So this looks like a pretty decent place to take a trade, location wise for sure. Just keep an eye on that US news later today. But basically what we've done over a decade with trading traps and the way that we hack people's trading strategies is just that. We've deconstructed these strategies, many different types of strategies, and essentially we're trading against people who buy and sell off levels of support and resistance. So if you've ever took a level of support and resistance, you were sure it was going to hold, but the damn thing never held, right? We're taking the opposite side of those trades. So if you'd like to learn how to do that and take advantage of the losing behavior and the losing situations that traders find themselves in, get yourself on the right side of that equation, then click the link below if you like the content, hit the like button, share it, subscribe if you are new, and I'll see you on the inside.